Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday Market Webcast. All right, let's pull up. All right, daily chart. I drew this box on Friday. We're still inside the box. We peaked above it a little bit. They brought it right back in. The 9-day held pretty well as support. So, I mean, for the bears, look, you guys got to start trading below the 9-day. Otherwise, the thing's just going to, it's not going to rip to the sky. It's not that good of an environment. But what it will do is it'll just bleed you up slowly and gradually, until we get up to around 4,200. Now, for the bulls, the reason that box has a top on it is because every time we get to 4160, 70, 80-ish, there's issues. Where's the overnight high? 4176. Came all the way back into 64, which isn't all that far. Small Globex range. 64 to 76 is the Globex range. So it's pretty narrow, pretty sedate headed into this morning. But somebody's going to have to win this box. I think there's a lot more upside potential out of the box than downside potential. Not because there's a much better bull case versus bear case, but just because you can see there, the bottom of the box right now is the daily midband, the green line there, the 20-day. That's going to be a battle. If you break below that, then you got to deal with all these things that you haven't been dealing well with lately in turning them into resistance. The red line there is the 50-day. The purple is the 200-day. The 100 is the yellow day. And we've gone from something that was very jumbled back in mid-March to something now that's really trying to line up into kind of a trend-up situation where you get the, kind of the rainbow of color there lined up in order of length, of moving average. So 9, 20, 50, 100, 200. Whereas, a year and a half ago, it was lined up in the other direction, 200, 150, 20, and 9. And that's just a byproduct of all these little compressions, for the most part, 80% of them breaking to the upside. And the bears squandering a lot of opportunities to convert things like the daily midband and the 9-day pretty consistently since February. This little failure here in February and the subsequent attempt at a low was really the bears' best opportunity in 2023 to really go ahead and bust the bottom of this box from back around New Year's and really take it down. When they didn't get that done, when they rejected it back, we fought over it a little bit here, but then they took it right back up. This was actually a really nice little technical failure, but they couldn't follow through. And unless they really have a decent week, that's probably going to result in a higher high versus this 42.08 half. Is it sustainable? Probably not. Probably not. Every time the bulls get up here, there's issues. They're really going to have some wind at the back of their sales from a lot of the earnings reports that are going to come out in the next week or so. I'm not sure that earnings reports and future projections are going to provide that wind, but at the end of the day, it's price. It's price. So here we are, hourly chart. This is what happened Friday. Look, 41.89 looks awful, comes in, but then here we are, weekly pivot, 9-day, and they can't get it done. Just this consistent inability to not be able to convert big numbers to resistance, to close below, or when you do close below, to stay below. That's the difference for the bears. They have nobody to blame but themselves. So many opportunities to convert things to resistance and to progress downward in this tape. So new weekly pivot comes in 41.5317. You've got the 9-day, basically 41.43. So, and like I said, it's a 12-handle range. It's flat lined. I'll be interested to see how whippy and choppy and sedated it is off the open. Mondays have been very difficult to trade, at least in my opinion. I don't like things that whip back, and say the direction of the trade is short. I don't like things that whip back up 3 to 5 handles, or if I'm long, things that whip back down 3 to 5 handles and just kind of run everybody out of stops. It's not so much the running everybody out of stops thing, it's the next move that I have a problem with, because the next move is typically not a sustainable move that you can hold, or a directional move. And I say hold, I'm talking about, can you hold it for a half an hour? Can you hold it for an hour? I'm not talking about, building a position in Procter and Gamble here. I'm just talking about something that whips back, runs some people out of stuff. The problem is after they run it back, maybe net versus where that pullback started or where that hop up started is maybe 1 to 2 handles, maybe 3. That's a mess. I don't trade messes. That's a disaster. I'm not a scalp trader. That's just a mess. And that usually just goes ahead and we slap a no trade zone on that in the room, and we sit and we wait for somebody to actually show up and do something. All right, that's all I've got for now. Everybody have a fantastic day. Couple things to look for. Volume weighted average price 4170. Proprietary moving average is 68. The hourly mid-band has been hovering there all day, and that's at 66. I don't have a lot of directional stuff right off the open for you because, look at it. If you want to flip a coin and tell everybody what you think it's going to do, that's great. Go ahead. Merry Christmas. That thing could go either way. What's going to be critical is, where do we close? Can we close below weekly pivot? Can we close below the 9-day? Can we close above 41.90? That's what's important. All right. Safe, healthy, take care, trade them well. Talk to you tomorrow.